Welcome everyone again to this ShareCafe Hidden Gems webinar. Thank you all for your time. We have over 500 investors registered. Just remember, we record this entire webinar and we record the individual company sessions as well. And all of those will be emailed out to investors who are registered. If you'd like to ask a question, type in the Q&A box. Please don't put your hand up. We can't see you. That's what the Q&A box is for. We'll get to those questions if we can. If not, we'll follow up with some content on ShareCafe the following week. Now, today we are discussing gold, nickel, gaming technology, and clean hydrogen. First up, we have Firefly Resources, ASX code FFR, market cap around $44 million. It's had a one-year return of around 90%, up 90% that is. The company is an ASX-listed gold exploration company with a portfolio of emerging projects located in some of West Australia's premier mining and exploration authorities. Their maiden drill program at Yalgoo has got the market really excited after 1 metre intercepts or grades of 1,400 grams per tonne. We have with us the Managing Director, Simon Lawson. Simon has got over 15 years experience in this space. Simon, thanks for your time this afternoon. Over to you.
No worries. Thank you very much for the introduction there, and welcome to the story of Firefly Resources. We've been around for a little while. We renamed the original company late last year, and we've embarked on a very gold-focused strategy, and it's starting to pay off for us. We've managed to pick up a very good asset in the Yalgoo Gold project, and we're obviously leveraging off the great geology there. As was mentioned, market cap around 42, with a bit of a slide in the gold stocks yesterday and the day previous. So that's where we're sitting at. We've got 2.5 in the bank, very well positioned, funded to do what we need to do. We're very tightly held, 64% approximately held by our top 20. The other 36 or so trades pretty well, so we're pretty happy with how that's set up. 257 million shares on issue, nice and tight, and a great management team. So I've got a really supportive board. Mike Edwards recently coming on as chairman, non-executive chairman. He's also a geologist, very supportive of what we're doing. Great corporate network, so we have a strong team there. Jeff Jones, MD of GR Engineering, lots of processing and construction of those processing facilities experience, so that's very helpful for us going forward. And Ashley Patterson came on with the recent vend of the project, and he's got a lot of finance and corporate background as well. So a good, nicely balanced board there. And we have a strict corporate focus of maximising funds as meters in the ground. My previous history running a business first and a gold company second was drummed into me by Phil Beeman at Northern Star, and that's how I plan to run an exploration company. So we are maximising our money in the ground. We're drilling again this week. In fact, we start today, 4,000 metres of RC. This is the second phase, and obviously there'll be some great news flow to come out of that after our initial 1,200 metres that yielded some pretty spectacular results. Next slide, please. So our projects are spread across WA. We like the jurisdiction. Obviously, it's a very good place to operate. Good permitting, low sovereign risk. Everybody's into it. So it's a great place to operate. We've got the Yalgoo Gold project in the centre there, only 5 hours from Perth, which is just a great location for us to be. It's sort of a forgotten goldfield that a lot of people have driven past and, you know, sort of ignored, I suppose, for want of a better term. We're not ignoring it. We're getting stuck straight into it. There's an advanced amount of drilling there over a historic resource. There's a couple of other little historic resources there as well. So we see that as a very strong foundation for what we're doing here. Huge scale. We picked up pretty much the whole belt, and we've also pegged more ground since then to make sure that we have all the footprint there over the good rocks. Drilling underway, as I said, second phase of our 10,000 metres that we've told everybody about. That's what we're doing. Very excited to start again today. My geo is on site. Very, very excited to get underway. Patterson Copper Gold Project. We put out an announcement yesterday just to remind people that we have that up there. We've added to that project. It's a strategic pickup for us. It's a great land holding, tier 1 world-class province. And we are very keen to sort of leverage off the fact we now have granted tenements and some of the shallowest high-grade results in that region. Forestania Gold Project, it's the project that attracted me to the company in the first place. It's a greenstone belt. It's where I've made all my success. I've had a lot of success drilling good geology with with the drill bit. So that's what I plan to do across the 3 projects that we have. Next slide, please. So zooming in on Yalgoo, you can see our footprint there pretty heavily across the northern part of the belt there, the 28 kilometres from the Yalgoo township north to the extent of our tenements is just littered with historic workings that have never had a drill hole in them. The Melville deposit's obviously our focus at the moment with 140,000 ounces in historic resource there. We're aiming to upgrade that to a JORC 2012 compliant as soon as we can. Following this 10,000 metres, I'd say would probably be the time frame we're looking at there. We're starting to see some very good widths there. We're starting to get a handle on the geology. There's 3 different types of mineralisation there, and I'll go into a bit more detail on that a bit further down the track. There's a lot of other gold prospects around that haven't had any follow-up in the last 15 years at least. So it's just it's an amazing opportunity for us. Lots of new resource potential there and updates to the existing. We also have 5 gold mills within 150 kilometres trucking distance. So we're pretty well positioned and we're sitting on top of a regional scale opportunity. Next slide, please. The Melville Gold deposit, no open pit. This is what I call a unicorn situation in WA and possibly across some of the other more major goldfields of the world. There's usually an open pit over the main resource. Someone's taken the cheap gold. We have this in situ, as I said, within 150 k's of 5 mills. So this is what we're looking at, a very shallow opportunity. We will be able to put a pit shape over this. That's my intention. We'll start with the resource first, and then we'll move down that sort of feasibility study pathway. The last resource estimate was done in 2004. It was actually done to 1999 standards. So there's a lot to be updated, and the gold price has tripled in that time. So very big opportunity for us there. Lots of news flow, as I put in there. 2012 update, resource upgrade. We're going to make it bigger. There's no doubt. There's 8 kilometres of strike along from this deposit. It sits on one banded iron formation, which you can see in geophysics from space, basically. So we're going to follow that to the north. There's also parallel banded iron formations, and we think the same quartz veining that's come through, the same porphyry intrusives that we see have affected those belts as well and created just amazing potential. The gold price obviously being 2,600 plus is very helpful too. Next slide, please. The first program we did there, 1,200 metres for 10 holes. We made a discovery outside of the existing resource within the first, well, it was by the second hole we knew we were onto something. So that was really good for us to see. We know that there's potential outside this existing historic resource. That's where the opportunity for us is. We know that, there's 84 RC holes drilled into this resource. There's a very solid foundation. We're just going to build on that. We saw some spectacular high grades. We know what that means. There's a high-grade vein system that runs through this banded iron formation, which is what the Melville deposit is centered on. That quartz veining has brought gold fluids into that rock type, and we know that we can definitely leverage off that knowledge that we've just gained in the first program to chase up those high grades and really put some heat under this. We also saw mineralized porphyry. We suspected that was the source. The previous owners had hinted towards something along these lines, so we're quite happy to confirm that is the case. We see mineralization in the porphyry. So we have mineralized porphyry, we have mineralized banded iron formation, and we have a structural component, which I think is the key to this belt, very high grade. So we're gonna leverage off all of that knowledge that we've gained and test these kilometre scale systems. Next slide, please. So just to give you an idea, the 2 cross sections there are 250 metres apart. The geology is very consistent. We can see these faults that are offsetting the banded iron formation. We can see the mineralization in the banded iron formation, and we can see these high grade vein systems that are cutting through. So obviously they're very spectacular. A metre at 1400, which was actually part of a 6 metre at 244, which to me is very, very encouraging. That is a well mineable width at well mineable grades. In our second lot of drilling, we also saw another 2 meters at 22 from 107, which again, to me, is another one of these high grade systems along strike. So we are right in it here. We will be chasing the high grade quartz vein component. The mineralized porphyry is obviously very important, and the banded iron formation is the shallow hosted close to surface. So lots of potential here. Next slide, please. We made some acquisitions immediately after the initial vend. 3 million in scrip was the initial vend. We picked these tenements up for 250,000 cash. I found it on Gumtree. You'll be surprised what you can find on Gumtree. We also picked up a bunch of gold processing equipment from an alluvial point of view. We're not about to go out there and process alluvial gold, but we are very happy about the upside of having that machinery there. There's a lot of demand for that sort of equipment at the moment. And the really important thing for us, what we saw as soon as we went to visit these people, was that there are outcropping porphyries that are mineralized at surface that have been tested in the past, and we will test them in the future. They've never had drill holes in them. They've been shedding gold into the space, and for the last however long, these guys that we bought this project off have actually benefited from the shedding of those porphyries. We're going to benefit from the porphyries. So huge scale, untouched, unloved, and we're getting stuck in. Next slide, please. So just to give you an idea of the scale here, 28 kilometres is where we can see workings, old drill holes with huge grades in them. We're pretty happy that we're sitting on top of a very big system here at regional scale. It's very, very rare to be able to pick up this much coverage. We are extremely excited about what we've got in front of us here. The geophysics is very helpful, obviously, so we don't have to spend a lot of time doing reconnaissance. There's been a lot of work done here, and when you overlay that new modern geophysics with the old geochemistry of soil sampling, you know that there's just kilometres of potential here. We have 5 advanced gold prospects, as I said. I'll let you go through the details there, but there's just so much to prioritise. It's really exciting. The really big thing for us is the untested historical workings. We can follow them for kilometres, and they've never had a drill hole in them. They were obviously mined back in the 1920s and earlier. They were hand mined. They were very high grade, as indicated by some of the way that they mined these. They mined them to surface. They didn't leave any pillars behind, and that tells me that they were mining visible gold, and as much as they could to shallow depths, and we have it open. So we will be getting stuck into that as soon as possible. Next slide, please. Moving on to our Patterson project, which we spoke about yesterday. Obviously, we've got a great ground position there. A lot of people didn't know that we'd picked this up. Under the former company name, there wasn't a lot of interest in what we were doing, but I wanted to make sure that people understood. We now have granted tenure in the Patterson province. We are the only junior with a significant land position that isn't joint ventured to somebody at this stage. And we have some of the shallowest copper, gold and moly grades in this region within the top 100 metres. This was initially discovered by CRA at the Wanderer prospect down by our central tenements there. And we are very keen to get involved there. We've managed to negotiate a mutual agreement with the local traditional owners, which is I'm very excited about being able to work with the people on country there. Next slide, please. Just a simple cross section, very simple geometry, obviously very lightly drilled. There's only a few holes there. They were drilled back in 87, 88, and no follow-up since then. So it's a screening opportunity for us. Very excited. Walk up shallow drill targets, and you can't say that about the Paterson. It is an exceptionally challenging place to work and can be quite expensive, but this for us is it looks quite cheap, low risk, and I think we're going to see some success here as well. Next slide, please. In Forestania, obviously the original asset that got me involved in the first place, large scale, 600 square kilometres of highly prospective greenstone belt. We need to do some more work on this. It does require us to advance this. We did make a couple of little discoveries, but obviously with the vend of the Yalgoo project and the success we're having there, that's going to be our main priority. But we will follow this up. We will keep working on this particular part of the world. Great opportunity for us to have a couple of greenstone belts within this company and exposure to Paterson. I think we really are well positioned. Next slide, please. Sorry, thank you. So just in summary, we have a tight capital structure. We're well funded. And we have a strong focus. That's as simple as it is. We intend to put every dollar into the ground as meters, and that's my primary goal. Our primary project is the Melville Gold project. We will deliver a JORC 2012 compliant mineral resource. We will grow those resources. We will establish reserves. We will have strong news flow. We will keep drilling. There's no doubt about that. That's what I love doing. This is what I do. Potential cash flow opportunities from the 5 nearby mills. I mean, it's pretty obvious. If you have these guys that, and we're sitting next to them building these resources and reserves, I'm pretty sure there's going to be a conversation coming fairly short. And we have a focus on project economics. I'm a mine geologist, so I look after every dollar. I make sure that we are drilling every dollar into the ground. We don't have an office. I am mobile. We have reduced the costs significantly across this company over the last 2 years of my tenure here. And I want to put all of those funds into the ground. And we're here to deliver results. I'm not here to be a lifestyle company. We're here to get it done. Look, and there's just a little saying there, drill it to kill it. If you can't kill it, it will be a mine. And I've carried that through my career. I was at Silver Lake and I've been at Northern Star. We definitely made those two companies much stronger with the philosophy. If you can't kill it, it will be a mine, and they are still mines today. All right, thank you.
Thanks, Simon. Great, couple of great assets you have there. You've got some fantastic grades at shallow depth. Is the plan to mine those, or do you keep drilling deeper?
Well, look, people are invested in our company as an exploration venture. That is what I intend to do, is to explore and grow these resources. If it came a time where, we were given the opportunity to supply someone with some ore, there'd be a conversation about how that would be structured. But at this stage, we're very happy to, keep delineating these resources. I think we have amazing scale here, and we have only really just started. I cop a little bit of heat for drilling the existing historic resource, but I mean, that's just the obvious thing for me to do. You test it, you make sure it's there. I'm a competent person, so I need to be able to sign off on these things with confidence. But what I can see is the scale. We're going to make this thing at Yalgoo much, much bigger.
And I mean, you are literally spoiled for choice. What are your priorities?
So the Melville Gold deposit, obviously having the lion's share of the ounces already defined, we will be growing that. We're starting to see positions outside of that existing resource. So that's just, to me, a no-brainer. We get stuck in there, we build it, we take it over 200, 250, 300. We grow to the north, we can see mineralisation in old RAB holes and RC drilling, sporadic RC drilling that was done for us by the previous owners. They really were just starting to get underway when they basically fell over with a focus on Indonesia. So we really are just picking up where they left off. I'm very grateful for that, but we will use that to our advantage.
And Simon, a couple of shareholders are talking here about the share price, as they always do. Kind of got sold off last week after you came out of a trading pause. Were the results of those 6 drill results a disappointment for you and the team?
Look, they definitely weren't at the same magnitude as a 1400 gram a ton, but from my point of view, I mean, I've drilled some amazing grades in some existing gold mines. 12,000 grams per ton. I held a record within the Australian gold industry for some time up at Paterson's, but we never recreated those grades. It's about consistency to me. 48 metres at 1.7, while some people might have been disappointed about that, comparing it to a 1400 gram per ton, when you look at it from an economics point of view, it's almost 50 metres. That's an Olympic-sized swimming pool full of, at 1.7 grams per ton. That is a spectacular result. That was actually the one I was more happy about. I love the fact that we've got high grade there. That gives us the structural component to upgrade these resources. It gives me comfort because I know, based on my experience in the Yilgarn and elsewhere, these high-grade quartz systems are actually where the upside is at. We've got our, basically within the first 10 holes, we have our finger on the pulse across this area. Great,
Simon. That's all we have time for. Great Australian gold story. Thank you for your time.
No worries. Thank you.
Okay, next up we have BetMakers, ASX code, of course, BET. Market cap 257 million. The share price has effectively tripled this year, up 335%. What do they do? BetMakers is a B2B software service business focused on servicing the wagering market and race operators globally. It's a technology company offering racing bodies and bookmakers access to their platform for a monthly fee. Some of their products include racing data, full event life cycle, sportsbook mobile and desktop white label platforms. We have with us the CEO, Todd Buckingham. Todd, thanks for your time. Over to you.
Thanks, Tim. Thanks very much for inviting us to chat, and thanks very much for everybody for listening in. I'll keep the overview quite light so that we can get to some questions if there's some questions, but I'll give you a bit of an overview of what BetMakers do. So essentially we sit in between the racing authorities and the bookmakers. So we provide services for racing authorities. That's things from integrity platforms. We look after their official price. We do their data distribution and collation from track to track. We grab their data, enhance that, and then we deliver that to bookmakers domestically here in Australia and internationally as well. And we do look after racing authorities, again, domestically and internationally back into the Australian market, and from the Australian market here into international waters. For bookmakers, we look after the life cycle for the racing products for them. The life cycle can include, as soon as the meeting opens up, a few days out, the fields, the form, we enhance that data for them and deliver content or enhanced content, such as runner overviews, race overviews, runner comments, and then we look after the race day controls. So as the day kicks off, whether there's scratchings, when the race jumps, if there's any change to track conditions and all that sort of stuff that a bookmaker needs to frame a market. From there, we provide a pricing solution for them. We give a full overview from the market analysis and allow the bookmakers, we'll give them a system that allows them to automate their pricing across the race day. We're doing about 5,000 to 6,000 races per week. So as you can imagine, those things need to be automated, and BetMakers provides that solution for our clients. We've enhanced that to what we call now managed trading services, which is essentially racing in a box. And we grab all of those services that we provide to our clients, we package it up, and then provide a trading solution on top of that. So essentially, we're the piece that sits in between a racing authority and the wagering operator. So we just move to the next slide. These are the customers. If you have a look here from a racing body, you can see there's most of the racing bodies here in Australia and a whole bunch of international operations as well. All up, that, as I mentioned, there's about 5,000 or 6,000 races per week that we look after. And then from the wagering operators, you'll see our clients there are the who's who of wagering around the world. All the bookmakers here in Australia, and a whole bunch of the tier 1 operators internationally as well. So I'll just move down onto the next slide. So we've been providing these services now for 5 or 6 years for the operators, and essentially as we build up the products that you'd seen above there, we have essentially been a software as a service type model. So as a client would take a piece of our technology, we charge them a monthly fee, and get paid as a SaaS. We've worked really hard over the last couple of years as we've seen a shift in the market to try and convert this to a more variable, which essentially then provide a whole range of services and a package solution for both the racing bodies and the bookmakers. So there's 2 ways that we convert this into a variable model. From a racing body perspective, we partner up with the racing body, package up their data, put it into a normalized solution, and then deliver that to our network of customers. For that, they charge the bookmakers a percentage of turnover for betting on their product, and we rev share that with the racing body. As I mentioned, with our managed trading services, it's only launched recently in the last couple of months, and we've had some really good success with that. We've got 4 or 5 bookmakers in the market here in Australia. We've seen this real shift of consolidation at the top end of the market with the major operators joining forces and being bought out. And it's created this opportunity for a bunch of on-course bookmakers here in Australia that's allowed them to bring their business online, and they've partnered up with BetMakers to bring that online into a really cost-effective way of shifting from on-course to online. And we've been able to give them a service where we partner up with them. And again, it's a variable component, and we're seeing some really good results with that from a variable model. You'll see there on the right with our graph, you can see our FY19 and FY20, there's some really good growth, but it's accentuated in the final quarter of the year. And in particular, the last couple of months there, we'll give you a June annualized run rate, and that's passed on into the first month of 2021. So we're getting some really good results in terms of our modelling and changing that from a SaaS model to a variable model, and we'll continue to see that growth into 2021. I'll just move on to the next slide. So where to from here? FY21, we've announced a number of deals in the US. It's a really interesting market, the US. They've just recently, in the last couple of years, announced sports betting that's come legalized in the US. And with that has been a whole range of operators coming into that market. The horse racing market over there is very similar to Australia about 10 years ago. Predominantly parimutuel. Operators then came into the market here in Australia and started betting on fixed odds, and it created this new wave. We've seen a huge growth here in Australia, where we've more than doubled in the last 10 years in terms of the turnover. We expect that to happen as well in the US, and BetMakers is on the ground over there. We've announced a couple of really exciting deals with New Jersey, which is the first state that legalized sports betting. And we're excited about that market. So scaling up for growth, as I mentioned, we've just put a couple of products in the market. Our managed trading services solution, which is essentially racing in a box, that allows operators, not only here in Australia, but internationally as well, who don't have a racing product or an online product, can basically pick up our product and start betting on horse racing. And so that's a really exciting opportunity for us. The other products, we've got a number of other products that we've put into the market as well, and we expect to scale up organically on the back of that. So just the strategic opportunities, BetMakers very well funded. We've got about $30 million plus in the bank. We're looking at opportunities both organically and inorganically. And so, as I mentioned, the organic growth is around building up these products that we've got and expanding them into international markets. But we're also in the market having a bit of a look to see if there's any M&As that we can do as well. So we've had a nice successful capital raise recently to put ourselves, our balance sheet in a really good spot, and we're excited about the future. So I'll probably wrap up there, Tim, if there's any questions.
I've got some questions for you, Todd. Just in regards to, let's start here with this kind of points bet deal with NBC Universal. The stuff kind of doubled on the news. Now, given Bet is the platform provider for PointsBet in New Jersey for fixed odds horse racing, what will this alliance have any flow-on effect for BetMakers?
Yeah, we've got a strong relationship with PointsBet. We look after their racing product here in Australia. PointsBet have seen a really good, not only PointsBet, but most operators here in this Australian market have seen some really good growth and really good sustainability, given the current circumstances with the COVID. Racing has stood up throughout that period, and the bookmakers are getting some really good results out of the Australian market. So when you go into the US, as PointsBet have, they would see racing as a significant part of what they're trying to do over there. And so we've announced that we're, again, partnering up with them into that US market. So the more successful PointsBet are, then obviously the more successful BetMakers is as well. So without sort of, we're not tied to PointsBet altogether. We operate, as you can see it, with a number of operators around the world, and most of those operators, the tier one guys, are the guys going into that US market as well. And so we'll be working with those guys in the US market. So exciting deal for PointsBet, really exciting, and I think one of the better deals that we've seen announced over in that US market, and we're excited to be part of that journey with them.
And the obvious attraction for you guys seems to be this kind of white labelled opportunity for the racetracks or the betting outlets to kind of migrate online. How are you positioned in relation to your competitors, you know, the William Hills and Flutter and those sort of groups?
Look, the solution that BetMakers does, it's really lightweight. And just to give you an example, Rob Waterhouse, who recently launched using our solution, got into the market within a couple of months. He had I think he had 4 staff when he launched and took his first bet. In comparison, recently, there's been other bookmakers that have built their own technology and built their own systems, and they've had to invest a lot of money before they could take their first bet. So, you know, I think Ned's, when they first launched, they had about 100 staff before they actually took their first bet. And so, you know, being able to give a solution where you can get up and running really quickly, low cost, and partnerships, and that's sort of what we can provide, and we're excited about it.
And just the profitability on the kind of fixed composition relative to the kind of variable market, betting market?
Yeah, we work really hard to get ourselves to a cost base where the company was profitable based off our recurring revenue, our SaaS revenue. And so for us now, the upside is in the variable. And you'll see there a real shift in our focus to the variable side of things. You know, comparing the two, you know, it's chalk and cheese in terms of, you know, the percentage of what we get out of a variable model. We get a lot more out of that than we do out of the fixed fee.
Right, okay. And the US horse racing industry probably isn't as sophisticated as it is in Australia, you know, kind of low field sizes, poor returns to owners. I'm just reading through a question here. We've seen in Australia that race fields payments to the racing industry has delivered significant new revenue. Is that part of what could play out in the States? I mean, is the real opportunity here for this kind of US horse betting market?
Oh, without doubt. I think, you know, the horse market over there really needs to get their head around that and realise that the opportunity for them is on the back of this sports betting that is coming. And you see that, like, I think horse racing can be a significant part of the sports books over there. And to be fair, I think it's probably going to be the biggest bet on sport across all of the wagering. And the reason we sort of come up with that assumption is if you look at the NFL, there's 200 games per year that you can bet on. With horse racing, there's about 260,000. So it's not a matter of saying, well, we're going to take more bets on every single race than the NFL, but it's just a sheer matter of there's just so much content.
And it's not a sophisticated market in terms of legalising sports betting. Can you give us a little bit more of an outline of kind of, I think New Jersey's waiting to be approved and you've got other states to play out soon?
Yeah, it's interesting. Betting on horse racing online has been around for 20 years. And so they bet online across about 35 states over there, which is legal. That's done through parimutuel. And so we're gone in there introducing fixed odds. Again, it's like Australia 10 years ago. So where we were 10, 12 years ago was, you know, 100% were parimutuel around Australia. It was dominated by Tabcorp. And we had some sports bookmakers that came in here like Sportsbet and William Hill, Sporting Bet. And so those guys came in and really changed the game for the wagering industry here. And it also changed the game for the racetracks. We're seeing this massive growth of, you know, from about $10 billion in turnover here in Australia is now at about 30 billion in turnover. So we've seen some huge growth, and we can't see that being any different in the US market.
Great, Todd, that's all we have time for. Sounds like you're in a great space in terms of accessing the US market. So good luck out there.
Thanks very much, Tim, and thanks for having us.
No problem. Next up, we have Hazer Group, ASX code HZR, market cap of around $55 million. Stock's had a one-year return of around 6.7%. 7%. What does the company do? It's a listed technology development company undertaking the commercialization of the Hazard process. The Hazard process, you can correct me, Jeff, on my pronunciation. What is it? It is a low emission hydrogen and graphite production process, which enables the effective conversion of natural gas and similar feedstocks into hydrogen and high quality graphite using iron ore as a process catalyst. We have with us the CEO, Jeff Ford. Jeff, hopefully you can explain to us exactly what that means.
All right, thank you very much, Tim, and welcome everybody. Usual disclaimer, but we can move on to the next slide. So yeah, thank you for the chance to introduce the Hazer process and talk about hydrogen today. I appreciate that hydrogen is very topical, and so as well as explaining what our technology does, I will take a moment to briefly dwell on why hydrogen. So Hazer is the owner and developer of the Hazer process, and it's a way of turning methane, whether that's from biogas from a landfill or wastewater treatment plant, or methane and ethane from natural gas into hydrogen and graphite. Two 21st century products which are seeing an enormous increase in interest, and which we expect to have multi-decade demand growth for clean energy, for clean transport, for batteries, for lubricants and advanced materials. We believe that our technology is a clean and cost-effective way of producing hydrogen, a key component of the global push for low emissions, high intensity energy. And we believe that there's a really strong premium market emerging for which our technology is an exceptionally good fit. And our technology is maturing at exactly the right time to take part in this global surge in hydrogen demand, which is anticipated over the next 3, 5, 10 and 30 years. Can we move on, please? So very quickly, why hydrogen? There's been an enormous number of announcements in the last week in Australia with the announcement of a technology roadmap by Minister Taylor, emphasising hydrogen as one of the priority technologies. The European Union has highlighted hydrogen as a key part of their green stimulus package, where they expect to invest over $10 billion in the next couple of years to help stimulate its growth. And in fact, in research released by Bank of America Securities, the old Merrill Lynch for us slightly older people, they estimated that the hydrogen economy had the potential to be $2.5 trillion revenue economy by 2050 and would need $11 trillion of infrastructure investment between now and 2050. And that's because hydrogen is the key to actually decarbonising hard to decarbonise sectors, transport, heavy industry, and it's a way of using, storing, transporting, and then reusing renewable energy in an incredibly efficient way. So hydrogen can act to take renewable energy from places like Australia to places like Japan, which has low renewables, through the export of liquid hydrogen. It can actually be a way of embedding more renewables in the grid by using renewable energy to make hydrogen when there's excess energy, and then turning the hydrogen back into energy when there's a deficit. So it's the answer of how do we make the grid more flexible and responsive to take advantage of the incredibly low prices we're seeing for wind and solar. But then hydrogen as a molecule, as a product, can in itself decarbonise transport, replacing diesel fuel in trains, in ferries, in heavy road transport, in buses, in waste collection vehicles, and even long-range personal utility vehicles. It can decarbonise industry and industrial energy by being used in turbines, in furnaces, but also as a feedstock for ammonia, for explosives, for petrochemicals, and for other synthetic chemicals. So hydrogen is poised to be a key vector for storing and delivering energy, a key mode for generating clean energy, a clean fuel for transport, and the building block of clean heavy industry as we progress through 2020s to 2030s and 2040s. Next slide, please. So what is it we do and why do we fit into that in a really important way? So we take methane as a feedstock. Methane is one of the key components of natural gas, but it can also be produced as a renewable gas by gas from organic sources. And that's typically through breaking down the organic solid waste that is left behind in wastewater treatment plants or in landfills. We take this methane, which by weight is 25% hydrogen and 75% carbon, and using iron ore as a low-cost sacrificial process catalyst, we react the methane to, in a pyrolysis reactor, in a fluidized bed reactor, to split apart the hydrogen and carbon molecules within the methane and produce hydrogen gas and graphite as a solid. So we produce two products with no waste through this process. Why this is so important and why this has a unique position in the market is that the traditional way of making hydrogen is to take methane, mix it with steam and produce hydrogen and CO2. So we have a very high emission benefit compared to the traditional method of manufacturing hydrogen. And we also produce a saleable byproduct in graphite, an advanced material which is becoming more and more in demand in the 21st century. Move on, please. So our company and our technology is founded on a really sort of rigorous and structured technical development program. I won't step through it all, but just to summarise, the technology started at the University of Western Australia with primary research into the kinetics and catalysts and the performance of the chemistry of the reaction. After the technology was spun out from UWA, we established a research alliance with the University of Sydney and have been collaborating with them ever since, and they continue to support our R&D program. Through 2018 through to 2020, we underwent a process of rigorous pilot plant testing, first in New South Wales and then co-located with our graphite collaboration partner, Mineral Resources in Kwinana, and we've run 2 pilot plant reactors. And then through 2019, up until mid this year, when we took financial close and final investment decision on our first large-scale project, we've been collaborating with the Water Corporation, the government-owned utility in WA responsible for providing drinking water and sewage services. And we're going to build the first larger-scale, continuously operating, fully integrated version of the Hazer process, the first larger-scale green hydrogen production plant in Australia. Based at the Water Corporation site at Woodman Point. Next slide, please. So this is a very exciting point in our development with the commitment to build the first larger scale, fully functioning example of our technology, which will be a model for future commercial plants with potential partners in Australia, Japan, Korea, Europe, the USA. So this project is a 100 tonne per annum fuel cell grade hydrogen production facility and will produce approximately 375 tonnes of 90% pure graphite alongside it. To put that in context, that 100 tonne per annum fuel cell grade hydrogen is enough to supply around about a 10 bus fleet. So enough to get early projects in the transport sector up and running. We're processing biogas, so that's gas that's produced through breaking down sewage waste as a way of minimising waste that has to go to landfill. And that biogas is currently mostly being flared on site at the Water Corporation. So for our client and partner at the Water Corporation, we represent a way of reducing their emissions while offering them a long-term high-value usage of their waste, and also finding a way to long-term reduce the amount of organic waste they create, so reducing their cost of operations and their impact on the environment. For us, we get a great source of feedstock, which is ideally suited to our process. We get to show a very green, we will have a carbon abatement credit of around about 100 tonnes of CO2 for each tonne of hydrogen from this site. And we get to produce green hydrogen in an area where we think will be well situated for future transport demand. Next slide, please. This project, which will be a $17 million project, is fully funded. We fully funded it through a combination of government grants. We've been well supported by ARENA, the Australian Renewable Energy Agency. We raised $8.4 million of equity in July this year at 42 cents, June 20 this year at 42 cents. And we've had an additional $1 million of equity through subscription for existing options. To complete the funding package, we secured a $6 million senior secured loan. Now that's financed by our future R&D tax rebate incentive cash flows. And together that leaves us funded to not only build the project, operate it for the first year, but continue with our international business development and our extensive R&D program. Next slide, please. So here's our key schedule. And this is really important because this will demonstrate us scaling the technology up and deliver it around about 12 months from now, ready to be a reference site for full-scale commercial applications. As I mentioned, we took the FID in July this year. We've awarded an EPC contract to Primero Group out of Western Australia. We're currently completing the detailed design and award of contract packages. We're progressing well with environment, heritage and planning approvals, and we expect to be ready for civil works and site preparation in December this year. And we'll have reached practical completion and commence operations from mid next year, so mid 2021, a really key date for us and the company. Next slide, please. So just to round off in the last minute and a half, I'll quickly sort of touch on a couple of points of how we're going to build on the CDP. So our commercial development strategy is coming together, I think, in a very logical way, just as the world is starting to focus on, okay, how do we really start to accelerate this hydrogen economy opportunity? So step one, and our first priority is demonstrating that our technology can scale up through successfully implementing our commercial demonstration plant, as I've just run through. Alongside of that, we have a number of engagements with excellent potential partners internationally and in Australia, looking at opportunities to replicate what we've done at Woodman Point, but at larger scale, or to embed our technology in heavy industry parts, or to embed our technology with utilities. And we're talking to people in Europe, Singapore, Korea, Japan, and the US, who've all reached out for our technology. And underneath that, the third stream is that we're working hard through our R&D program and still in discussions with our collaboration partner, Mineral Resources, about how we build evaluating graphite business based on our deep understanding of the graphite product produced through the Hazer process. Next slide, please. So a couple of key points that I guess I think show that that strategy is actually engaging with the market the right way and is starting to bear fruit. In January this year, we announced an MOU for a strategic alliance with Chiyoda Corporation of Japan. Chiyoda is one of the world's leading EPC and O&M, one of the leading engineering companies. They're a key leader in the Japanese hydrogen market, and we're working very closely with them for them to lead on our behalf engagement with potential customers, cities and prefectures in Japan, with a model where we will provide the technology and they'll provide the on-the-ground project building and operating services. So we think it's a really good mix, and that's starting to show some real fruit. And we hope to translate that into feasibility studies in the upcoming year. Next slide, please. In Australia, the hydrogen market is starting to grow, and we're seeing an enormous interest from potential customers and end users as everybody who has a serious carbon emission is starting to work out how they will seriously start to reduce that over the next 5, 10 and 20 years. We're collaborating with Macquarie Capital and Hyzon Motors, a provider of hydrogen vehicles, to undertake a feasibility study into establishing the first renewable hydrogen refueling facility in Western Australia. And we're looking at the Mandurah and Peel region, so an area about 50 kilometres south of Perth, as an ideal location where we could act as a supply source from our project. It's a key transport point with both agricultural and mining related transport. And there's a lot of interest in that area for potentially being the first home for heavy vehicles running off hydrogen fuel cells in Australia. Next one, please. So just briefly to finish, as well as the hydrogen, which is our key focus, and as shown by the Bank of America report, actually has enormous potential measured in the trillions of dollars. But we do see significant value in the graphite that is being produced. It's a unique carbon material. It will require intensive R&D, which we're well set up and well funded to carry out, to really understand its chemical and physical performance. But we're seeing interest from potential users in the lubricants, activated carbon, battery materials, carbon black markets. And we're looking to work with a number of them to create specific products for their applications. Next slide, please. And just this is sort of one point that often gets overlooked, but would just flag. I'm very pleased with the way that we've built such a strong R&D platform over the last 2 to 3 years. The company was founded in R&D. The technology came out of the university sector. We're now part of one of the Australian CRCs, Cooperative Research Centres, the Innovative Manufacturing CRC. So this is a platform between governments, academia and industry to really take advantage of Australian technology. It's a great platform for us to collaborate with other companies who are interested in advanced materials. It's a mechanism for the government of co-funding the commercialisation of research. And so we've been invited into an initial 2-year partnership with the CRC, which will reduce our cost of R&D. And we're really excited about what that might produce. Next slide, please. And just lastly, to close off on, we do have a collaboration agreement with Mineral Resources on our graphite. We successfully completed stage 1 of that pilot plant during 2019. This has entered somewhat of a slowdown mode as Mineral Resources really focused on delivering their iron ore business during the COVID disruption in early 2020. But we hope to kickstart and continue discussions with them about progressing that to a larger scale synthetic graphite plant. And we'll update shareholders as we get more clarity from our partner on that. So Tim, I might like just to finish there and open it to questions. Hydrogen is an incredibly exciting sector at the moment. There are literally billions of dollars being galvanised to see hydrogen accelerate the way wind and solar has over the last 10 or 15 years. And we fully anticipate this industry to be significantly more mature in the next 2 to 3 years as our technology hits an equivalent point of maturity.
Thanks, Jeff. We've got lots of questions, actually. It's a real area of interest these days, obviously. Can you talk to the patent and whether you have any patents approved around your process? Lots of questions on that.
Absolutely. Yeah, so the technology is unique and it's in an area which has been studied extensively. There's many dozens or hundreds of global research programs looking at different variants. We are pursuing patents in 24 countries in 4 patent families. In the key patent family, the one which gives us a patent for the production of hydrogen from hydrocarbons using iron ore as a catalyst, we've been granted full patents in Australia, also in Singapore, New Zealand, Eurasia, or Central Asia, Eurasia, so Russia and the Stans, and we have received our first patent acknowledgement in the US. So we're pursuing a patent strategy across 3 areas of our technology, patenting it in 3 different ways. They've proceeded from applications into full patents, and in the remaining jurisdictions, they're following those lead application jurisdictions. And so far, we haven't had any of them stopped, knocked back, or disputed.
Right. And where do you believe your kind of battery grade graphite sits on the kind of cost curve?
That's one of the areas that we're looking at very, very closely with our R&D. So it's not one that I can give a clear-cut answer to immediately. The battery graphite materials market is one of the most technically complex and least transparent markets around. It's very much a deeply technical chemicals type product. It's not a commodity or bulk type product, as I think some of our Australian peers in the graphite market have found out. And in fact, the value of battery grade graphite can vary enormously. So there's very, very specific products. We've successfully tested refined samples of our graphite to show that it can make effective half cell and pouch batteries. And we're still working with intermediaries, so traders and R&D houses, and we're also working with potential battery manufacturers to really understand how they would design a battery using the unique characteristics of our graphite as it's purified. And so that's going to be a real focus in the next 12 months as we get to the point of having some larger scale samples available from the CDP.
Right. And just time for one more question. In regards to your pilot plant, is that fully funded with grants and things like that?
Absolutely. So the commercial demonstration plant, we actually think it's gone beyond pilot stage, is fully funded. We have a $17 million capital budget. We've got a $9.4 million grant from ARENA. We have a senior secured loan of $6 million and a cash balance as of today of around about $16.5 million. So we're fully funded through construction and the first year of operations of that plant.
Great, thanks, Jeff. That's all we have time for. Unfortunately, we've got a lot more questions, so I think we should follow up next week.
All right, thank you very much, Tim.
Thanks for your time. Next up, we have Rox Resources, ASX code RXL, market cap of around $125 million, a one-year return of up 134%. Rox Resources is a mineral exploration company with Australian assets at various levels of development. We're talking gold, nickel, copper, cobalt, all projects in Western Australia. We have with us the Managing Director and CEO, Alex Passmore. Alex is a qualified geologist with extensive corporate experience. Alex, over to you, mate.
Great, thank you, Tim, and thank you all for joining this afternoon's webinar. ROX has several advanced gold and nickel projects in Western Australia. Our flagship project is the Untitled Gold project, which is south of Sandstone in Western Australia, in a very good area to be operating a gold development project and potential new development. We acquired the project in early 2019 and have been busily adding to the knowledge base around the project with a view to significantly expanding the existing resources at the project. So the UME project is an old historic producer, and you can see on the slide here there's a line of historically mined pits, and in and around those pits and below those there is an existing resource of 1.2 million ounces of gold. And we are aiming to add significantly to that number from the drilling that we've been undertaking for the past 18 months. A key component of that addition is going to come from the Grace prospect, which is a new discovery that we made well away from those pits in a newly defined area that hadn't been looked at by previous operators, and we've seen some pretty spectacular results come from that area, which I've listed there, 25 at 35 grams per tonne, 5 metres 125, and the list goes on, which all bodes well for a strong maiden resource, which we're aiming to put out before Christmas. We are seeing that all of the supply chain in Western Australia in the gold industry is very busy at present, with lab turnaround times going up to 8 weeks. And that's somewhat frustrating, that process, but we're aiming to get a resource out before Christmas. We have been busily drilling at UME. We've drilled over 20,000 metres. In fact, we're getting close to 30,000 metres of RC, and as well as diamond and air core in addition to that, and so that will facilitate a maiden resource. The UME belt has been a historical producer, but was overlooked for the larger greenstone belts around WA, like the Norseman Wiluna greenstone belt, until a couple of years ago, when there's been some spectacular discoveries in the UME greenstone belt and some corporate activity with Ramelius taking over our near neighbour, Spectrum Metals, for $210 million about a year after they made a good discovery. ROX has other projects in addition to UME. We have a substantial gold and nickel portfolio in another greenstone belt to the east of Wiluna, although the time limits on today will probably we'll leave those off today's agenda. Next slide, please. So a little bit of background on ROX. 112 million market cap, well funded with 14.3 million in cash and receivables. We went through a bit of a re-rate in the middle of the year, which was well overdue, and that was as the market was starting to realise how much resource growth potential there is at UME, and how high grade and extensive this new Grace prospect is. So we're well funded in terms of our exploration plans and development and short to medium term development plans thereafter. Next slide, please. So a little bit more detail on UME. UME is located between Mount Magnet and Leinster in Western Australia, south of Sandstone, surrounded by mining service towns, which is very handy. We own a 70% interest in the UME gold mine in a joint venture. We're manager of that joint venture. As mentioned before, there's 1.2 million ounces of existing resource, which we'll add to. And in terms of its historical production, the UME mining centre has produced 670,000 ounces of gold at 5.5 grams average grade over the history. Now, interestingly, that was produced when the gold price was around $400 Australian an ounce. So the Aussie dollar gold price is around 2,600 at the moment. So the economics of the project changed. So there's existing resources which are now economic that weren't economic when the mine was shut down in 1997, and there's also a renewed impetus to carry out exploration where economic prospects are more likely now at today's price than they were back then in 1997. That means there has been limited exploration over the past 10 years, and we see strong potential for resources around the place at UME. We own substantial ground regionally to the UME Gold Project, so we have about an 80-kilometre long strike length of prospective greenstone belt, and we hold that both in a series of joint ventures with Venus Metals, our joint venture partner, but also in our own right 100%. So next slide, please. So looking in a little bit more detail as to where we've had this recent exploration success, this is just an aerial shot looking back over the main pit at UME. You can see two distinct colours in that pit. On the left-hand side, you've got a yellowy green looking rock, which is a greenstone, and on the right, you've got a white kaolinitized granite, and our new discovery is off in that, on the right-hand side of that image, in the granite, in a sheared granite, and just simply wasn't looked at by previous operators. Next slide, please. So UME, as we are looking to increase the resources, put a reserve around those resources and go into production, the things that you require as an operation to get into production are very important, and can, in a remote location, cost add significantly to capex. So UME is well situated in terms of infrastructure and has some key advantages to any restart scenario. So we have access roads and sealed roads up to 90 kilometres from the mine gate. We have an existing good exploration camp and accommodation camp, which is easily expandable. We have an airstrip, coil shed, workshops, tailings disposal facilities, mine offices. We have power lines. We know that processed waters and the bore field is in place, and that doesn't affect processing. So all of that's a key advantage. And then longer term, there's actually some really important infrastructure nearby, like the Midwest gas pipeline, that one day, if there is a very large operation here, and now I'm talking like independence groups Tropicana or Gold Roads Gruyere or Goldfields Gruyere, there is cheap power available. So there's a gas pipeline that goes to within around 80 kilometres of site, which has got significant capacity. So as we're looking at development scenarios, we're just looking at what power costs could be and various production scenarios could be. In terms of a restart, UME is classified as a disturbed site. So it's on an existing mining lease, has had mining there before. So the environmental approvals for development are relatively straightforward. We know that we're not, we won't be damaging any key flora or fauna, and that all those baseline studies have been done, and it is a disturbed site. In terms of mining and mineability and geotechnical considerations and dewatering and other things, they're well understood from previous mining as well. Next slide, please. So in terms of a little bit of regional geology and why we like UME so much and why it's such a prolific belt. So the UME project sits on a regional scale north-south trending shear zone called the UME shear zone, and that runs around 150 kilometres from north to south. And then within that shear zone, there's a variety of greenstone belts, greenstone and granites caught up in that shear zone, and that shear zone has been a key factor in gold being placed in the belt. And we see gold occurrences all the way along that belt, including the UME project itself, but also the Petty Gold project, which is under development by Ramelius Resources. So a significant scale shear zone that's well mineralised all the way along and we are the largest landholder in the area. Next slide, please. So looking at a bit more specifically where the gold occurs at UME. So we see the gold in mafics, denoted in green on this map, and also in the granite, which is pink on this figure. There's some fairly spectacular grades there, and you can see where we've been putting in a lot of our drill holes into the new discovery, the Grace prospect, and also where it might extend out into the granite. Our key for the drilling program, which is ongoing, is, as previously mentioned, is to expand the existing resource of 550,000 ounces in and around old pits, which is easily mineable, and add significantly to that to underpin a restart. Next slide, please. So, as mentioned, a key part of that increase has been the Grace prospect, which is a high-grade gold deposit sitting in shear zones in the granite next to the old workings. You can see some fairly spectacular results coming from that with the last release in September, outlining 13 metres at 60, 4 at 18, and others. We're now saying this shear zone that hosts this high-grade gold deposit extending well north into the granite, and you can see on the figure I've included in this slide where we're doing air core drilling to pin that down at the moment. Next slide, please. Not only are these systems long in terms of a strike length sense, but they can also extend to great depths. So the mineralisation that sits next door to Grace, around 300 metres away, that was historically mined, is known about and known to occur down at 1,100 metres depth. So we're fairly confident the structures in the granite will go that far as well. Next slide, please. So in terms of our work program, this is a quick summary of it, and it's certainly been very busy out there. We've had an air core rig, a diamond rig, and an RC rig going flat out, and plenty of news flow to come. With that, I'll hand over to questions.
Thanks, Alex. A couple of questions here. One from Ralph. So Rox has a 45% share of the tenement bordering Saba's gold targets. Has the JV run a ground mag or aero mag survey over this tenement and others around the Penny West gold mine?
Yeah, thanks for the question. We do have a tenement next to Sabre, 1019 down in the southern part of our tenement package. We have focused slightly more to the north of Penny West, and we have a target there and a prospect there called Sovereign, and so we were following the Penny West structure to the north. The northwest is also a key structure for us to look at, and there is old historical aeromag over that area, but nothing new, and that's on a key area to look at, which is on our list. So we will be doing detailed mag and air core drilling there in the next couple of months.
And some questions around timeline to production.
Where aspirationally we'd like to be late 2021 or 2022. It depends on the scale of the production, whether we had an early starter project and toll mill some material, or whether we had a large scale standalone milling operation.
And questions around can you get to 100% of you and me?
There's no legal mechanism for us to, but we could always negotiate with our joint venture partner, but if not, the joint venture works very well.
Okay, and one last question: the gold price. What's your kind of medium-term view there?
So gold price is very much related to global interest rates and the Aussie dollar. So in US dollar terms, the gold price will generally be high when global interest rates are low, because the interest rates are the cost of holding gold, represent the cost of holding gold. And in Aussie dollar terms, well, it depends on that interplay, but also with the Aussie dollar outlook. So, that feeds into bulk commodities and what the iron ore and coal prices are doing, as they're generally pretty big drivers of the Aussie dollar.
Alex Passmore, thanks for your time.
Pleasure. Thank you.
See you again. Okay, that's all we have time for this week. Watch out next week. We've got school holidays coming up. We're trying to put together a kind of a battery day summary, which may be earlier than Friday. We've got some players that we're discussing, participants in that battery chain, and watch out for some information about that if we can get that webinar together next week. Thanks for your time. See you next week.